Welcome to this week's episode of Mortgage Q&A with AJ. Today, we will be talking about when is it a good time to take out a second mortgage?
All right, again, back to my basic calculations. All right, so the first thing is on a second mortgage is there's two types. There's a fixed second mortgage, and then there's they call it a HELOC, again, abbreviations.
Break it down.
AGLOC, it's an equity line of credit, right? So the difference is on the fixed second, you are paying on that immediately. So you're borrowing all of the money at once. The calculation of how they let you borrow is right now, it's at 85%. It used to be higher. They allow you to go to 90. Sometimes they even took you to 100% loan to value. 100% loan to value means, or 85% loan to value means how much your appraised value is compared to what you owe. You times that. You times what the value of your home is. You times that by 85%.
Okay.
And then you subtract what you owe from that, and that's how much money.
Why 85%?
Right now, that's right now. It used to be more because banks weren't as afraid of the risk.
Okay.
Right? But now it's 85 because they still want you to have some equity in your home because, again, for chances of, the market changing and shifting and your value of your house going down. Because what happens when people are upside down, they stop paying, and now the banks lose money.
Is it common to take out a second mortgage? That sounds scary to me.
And a lot of people say that, but it's very common. Again, like I said, right now, interest rates at an all-time low. If you're getting an equity line at 5%, but your credit cards are 12 or 18%. So, it's very common, and it makes sense in lots of cases. Again, for me, mortgages, I go back to it's your specific situation, right? An equity line or a fixed second, you're going to take it out because you want to put a pool in.
Right.
You want to do construction to your home.
Is it usually with like renovation or additions on the home?
Yeah, there's all types of different ways. It's so many different ways that why you would do it.
So do people typically take out a second loan when it has to do with a renovation or making an addition?
Right. There's so many different reasons, but that is one of them. Okay. Right. It's to pay off credit card debt. Some people do it to pay off a car. Sometimes it really just depends on where they're saving the money. I'm a big fan of having an equity line because you only pay on what you borrow. Right. And it's like a credit card. So if you can have that 5% interest rate, say you have a $100,000 equity line of credit, but it's at a zero balance, you don't pay on it. You don't owe anything monthly. So I'm a huge fan because why would you not want to have access to cash, not free, but have access to cash available to you when you want it, right? Because you never know what's going to happen, right? Emergencies, things come up, and if you can have this line that you can pay on and you can pay it off and use it, I'm a huge fan of having one. Now, what happens is right now a lot of people are asking on their cash out refinance if they should do an equity line or if they should do a fixed second or if they should take cash out on their regular refinance. Right. One of my simple things is it's called blended rate. You can actually Google it, blended rate calculator. You go on there, you type in how much you owe on your loan. Then you talk about what your second rate mortgage would be. So you'd ask whoever's doing this for you, Bank of America, Wells Fargo, bank, right? Or a credit union. You'd ask them what their rate is. Then you type in that number that you're borrowing. So let's just use round numbers. You have $400,000 on your mortgage. You want to borrow $50,000 from your bank. Your $400,000 is at a 2.5 interest rate. Your $50,000 is going to be at a 5% interest rate. Okay. Now you're going to get a blended rate, which you go on and look, and off the top of my head, I'm going to say your blended rate is probably going to be like 2.7, right? Oh. Well, if interest rates are 3% on a cash out refi, why would you take out $450,000 at 3% when your blended rate's 2.71? Right. It's better. So sometimes you don't want to take your large amount of money, which is 400,000, because you want to borrow 50 and combine it together. So now you just have two mortgages. And a lot of people will say, well, I don't want to pay two. No, pay the two.
Right.
You don't want to lose money that way.
Again, it's about doing the math, right?
Correct.
Or finding someone that can do the math for you.
Exactly. And the other thing is be leery of loan officers that are saying, no, you should take that out, because they're making money off you for taking that full amount out, but they're not guiding you in the right direction. And for me, I have no problem saying no. Yes, I need to make a living. Yes, I need to feed my family, but I don't need to take advantage of you because you don't know.
That's why it really is important that people like myself learn about this before we even talk to lenders, because we wouldn't know if they're looking out for your best interest or not. Like, you don't really know because you don't know anything about it.
Or I would say, have somebody that you trust.
Right.
And again, have them on speed dial. Like, I have no problem answering questions at any time of the night, any time of the day.
You're like a financial therapist.
Really, I am. That's really what the job is. And the job, I say it all the time, the job doesn't sleep. And you can text me, it's quick information, it's easy, and I guide you. And for me, I treat everyone's situation. What would I do? Knowing the things that I know.
Yeah.
What would I do? How would I handle it myself? And I think that comes across to people, and they see that I'm very passionate about it, and I'm only guiding them in the right way, because it's easy to say, oh, you should refi. Right? That makes me money. But the truth is I turn down a lot of business going, nope, you shouldn't. Go take out an equity line. Here's the number to call. I'll even guide them and go, and when they send you the number, send it to me, and I'll break it down for you.
Yeah.
Because I want to be involved in all of it.
Right. You want to see success.
Exactly.
In your clients.
Exactly.
I mean, that's only going to help you in the long run as well.
Right.
Yes.
Very true. So I actually have two examples of when the right time is to do either one.
Oh,
right?
great.
So I have a client that they had a 3.25 interest rate. They won cash out equities gained in their home. They can go up to 80% loan to value. And because I'm lowering the interest rate in full, then I'm 100% go on that, right?
Right.
If you're in a 3.25, but I'm going to change it, even if I change it in eighth to 3.125, I'm going to take you into the 3.125 and give you the lump sum of money, because now I'm lowering all of your monies.
Okay.
And your blended rate is going to be better, or your regular rate's going to be better than your blended rate. Right? So that's when I'm a go. So as long as the math says it, 100% go. Even if I kept it the same, I would do it.
Really?
It makes sense.
Yeah.
Because if you're borrowing at 3.25 on 400,000 and then your blended rate becomes 3.5 or 3.4, all of your money at 3.25 is better than 3.4.
Right.
And it's worth your time. The other example is if you're in a 2.5 and you call and you say, well, I want 50,000, but your blended rate is 2.71, then we don't do that.
So it's pretty simple.
It's really, really simple. It's really, really simple. I'm giving you the numbers. And again, I can send you to the website yourself. I'll send it to you. You plug in the numbers. I'll show you how, so you can see it for yourself, so you can make sense. Now, I'll be honest with you. I've had people where the blended rate is higher.
Yeah.
Or lower, where the blended rate is lower, and they come to me and they say, I just want to make one payment. I don't want to send out two checks.
I mean, I do understand that way of thinking. Even if it is better in the long run, there's something about having
I don't like it, but I am here to do what you want.
Okay.
Right. So I would advise not to. I will send out the second check for you. You're losing money, but at the end of the day, you have to do what's comfortable for you.
Yeah. Thank you for tuning in to another week of Mortgage Q&A with AJ.